Qualcomm Stock presented quarterly earnings last week and it went down roughly 6%. And it has been an interesting year for them as well, down to almost $100 only to see a few months later a $160 on the 1-year chart. So earlier this week they reported an EPS of $2.75, beating analysis estimations. Revenue was reported at $9.92 billion, also beating the estimations. And people love Qualcomm for different reasons. One of them is the dividend, and I understand why with dividend yield at 2.27% and 20 consecutive years of dividend increases. If we look at the total returns in the past 5 years, we see that Qualcomm stock crushed the S&P 500. So could this be the perfect time to buy Qualcomm stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Qualcomm do? Qualcomm develops and licenses wireless technology and designs chips for smartphones and other devices. When we dive in the most recent earnings report, we see that revenue was reported at $9.9 billion. EPS was reported at $2.46. Both exceeded high end of the guidance range, so we are starting off strong. The QCT segment is by far the biggest segment with $8.4 billion in revenue. The EBITDA margin increased 300 bps year over year, which is really great. QTL, the second segment, reported $1.5 billion with EBITDA margin of 74%. In here we see the financial results and guidance. As mentioned earlier, results were exceeding the previous guidance range, especially the margin is something I'm really excited about. For the second quarter, it is expected that revenue is in a range of $8.9 to $9.7 billion and EPS to be in a range of $2.2 to $2.4. Qualcomm expects margin to decrease slightly again. The interesting thing is that the QCT segment is up 7% year over year and EBITDA is up 19% year over year. However, the QTL segment is down in both the revenue and EBITDA. If we zoom in a little bit more on the QCT segment, we see that handsets is up 16%, which is by far the biggest sub-segment. Automotive is also doing a great job with 31% growth year over year. However, Internet of Things is down 32%. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Qualcomm stock is a 159 billion market cap company. PE ratio is at 20, indicating they could be fairly valued right now. Later in this video I will show you my 3 price targets for Qualcomm stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on Qualcomm. And I'm also interested to hear your thoughts in general on this company. Revenue is at 36 billion and in this graph we see that revenue went up in the long run. However, it starts to decrease ever since 2022. The good part is that most recently revenue starts to increase again. Margins are going up and down over a longer period of time. Most recently they started to increase again, which was much needed in my opinion. EPS is looking pretty similar to the revenue and the margin. I would love to see a bit more steady in pattern here. Analysts expect that EPS will grow at a pretty high rate from here and will gradually increase to $12.44 in 2027. You're looking at a 10% average growth per year. For the revenue, analysts expect 45 billion in 2026, with a mid to high single digit growth rate per year. Return on assets is sitting at 15%, which is a great number. Return on equity looks really good and the most important number here, return on invested capital, is sitting at 14.8%, which is a really great number. However, it is significantly lower versus the 5-year average. Current ratio is at 2.56, which is a decent number. Nothing really special to mention here, to be honest. Right now, Qualcomm has 15 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Qualcomm has 12 billion in total cash, so they can't pay down almost all of their debt. To me, this looks really good. But it is still very important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run. However, it is not really steady and consistent. Shares outstanding are decreasing big time, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.27%, which is a great number. Annual payout is at $3.20 and payout ratio is at 35%. I prefer 50% or lower, so right now they have 65% left in cash to buy back shares, pay down debt, do acquisitions, and all other things. The 5-year growth rate is at 5%, which is a decent number. They have increased the dividends for 20 years in a row, which is very impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that Qualcomm did increase the dividends at a decent pace. Most recently, they are increasing this pace again to high single-digit growth. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is decreasing over a longer period of time, which is a good sign. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a slightly slower rate versus the previous numbers. Overall, these dividends look really good to me, but how about the historical returns? I decided to compare Qualcomm stock with the overall market, in this case the S&P 500. Next to that I added TXN and Intel. On the 5-year chart we see that Qualcomm crushes all stocks in this list with 224% return, including dividends. The S&P 500 is second with 98%, and Intel has the lowest return with minus 0.77%. On the 1-year chart things look pretty interesting. Qualcomm only returned 7% versus the S&P 500 sitting at 20%. However, Intel had a great return of 44%. On the 6-month chart it is again Intel that is having the highest return with 24%. Qualcomm returned 11%, slightly higher versus the S&P 500. On the 1-month chart it is the S&P 500 that is having the highest return, while all the other returned significant lower numbers. Bottom line, Qualcomm beats the S&P 500 in the long run, and most recently we see some interesting things happening. So could this be the perfect time to buy Qualcomm stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 20, 22 and 24. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 18, 19 and 20. For the free cash flow I'm putting in the same numbers again. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Qualcomm stock is around $141. I hit analyze and we see a lot of red numbers. We have a low price target of $80, we have a mid price target of $105 and we have a high price target of $137. To me, the mid to high price target is the most justified here, meaning the stock is overvalued according to these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Qualcomm is that it is a great company. The earnings surprised me a little bit with the revenue numbers and the margin numbers. On the other hand, it was much needed. I used to own Qualcomm, but I sold my position around $130, since I felt there wasn't much more room to grow. Qualcomm proved me wrong in the short term, but most recently it is coming down again to $130, which is around the current high price target. For me to buy this stock again, I need to see a price of around $100. However, if you're only focusing on the dividend, it is a great company, with a decent yield and decent growth numbers. But above all, they are very stable. Most fundamentals look really good to me, and the fact that they can pay down almost all their debt is really nice. However, as I mentioned earlier, the current valuations seems a bit off to me. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.